Welcome to yet another Lumorus Forum, where we look at topics of interest. A lot of these topics that we discuss on Lumorus Forum comes in from our community, or we do a lot of horizon scanning here at Lumorus, and we spot some of these trending topics. And so therefore, we organize these forums to have discussions around them so that people in our community, our clients, and well-wishers can learn and be informed and participate in the discussion as well. So my name is Romeo F. I'm the founder and CEO of Lumorus, and today we will be discussing the topic of corporate governance essentials for startup and small businesses. And basically, we're looking at, is a corporate governance a thing that small businesses and startups need? And I am really very pleased to be joined today by Mike Blackburn, OBE. Mike is a member of the Lumorus Advisory Board, someone who I've known for a number of years, and I would say one of the best persons to be involved in this discussion. Mike is from the northwest of England and spent 36 years as a corporate executive in private sector, most of that working for technology companies. He spent 25 years working at BT. When he left in 2018, he was both the chair of BT's Northwest Regional Board and head of digital for governments. Mike also has held several non-executive roles, in his lifetime. Some of them include the chairman of the Local Enterprise Partnership, the LEP for Greater Manchester. This is a private-public body which became the leading organization on the development of Greater Manchester growth strategy. And those of us who are in the UK know how Greater Manchester is now one of those flagship cities across the UK. He was also a member of the Lancashire LEP, where he led the formation and implementation of the business growth hub for Lancashire, I think called Boost, and supported businesses in their challenges to access finance and skills and funding, etc. Mike is currently chair of Dixon Academy Trust. He's also chair of the Growth Company and a trustee of Lowry Theatre. Lowry Theatre, thank you. And we've had quite a number of discussions about that because I'm also a big fan of the arts. And he's also a non-exec at Transport for Greater Manchester. He was awarded an OBE for his services to business and economy in the Queen's Honor List in 2015. Mike, welcome. So good to have you on the forum that you've been hearing so much about.
Indeed. It's great to see you, Romeo, as well, and have a conversation with you and just continue some of the conversation we've been having over the number of years.
Yes, absolutely. So I think one of the places we could start is kind of giving people a definition of, what exactly is corporate governance and why should it matter, period?
So I always think about that question of, why do we use that language for a start? It's true. It's the language that puts people up. The words corporate governance essential. It's like, is that really how we really talk? And you think, how would I talk to somebody in a cafe, in a pub, over a dinner course somewhere?
Yeah.
Never use those words. You'll be talking about, how do you run your business?
So true.
How do you ensure that you make the right decisions? How do you ensure that you are purposeful and aligned? And then how do you ensure that you're agile as a business? So it's about trying to ensure you've got the right spans of control in your business, the right structures and frameworks to do the right things for you at the right time. It's an evolution, not a thing. It has to evolve. It should be talked about every year. Are we doing the right things? And it's important, but it's not the same for every company.
Yes.
Large and small, they're different. But if you're 50 small companies, you might do it in slightly different ways. Yeah. And you should start thinking about it in day one.
And you're so right. And we're going to come to the different stages of businesses and what, what governance, let's call it governance, means for each of them. But, when most people hear of corporate governance, you're so right. And as someone who is a corporate governance professional, I've never thought about it the way how you've just described it. Why do we use that terminology? Because it tends to sound scary. When people think of corporate governance, they think of these large corporates, as it would say. Someone posted on one of our post for this, when we posted this on LinkedIn about this event, they said that it's unfair for the same level of governance to be that's imposed on large companies to be imposed on startups and SMEs. Would you agree? And if so, what should good governance look like for startups and SMEs in general terms? Because we're going to talk about, you know, the different stages. You started talking about some of those stuff, but what are some of the core principles, and what should that look like for these group of companies?
So the one thing it shouldn't be nobody should be thinking about, it's not about bureaucracy, which is what people think about corporate governance being, just something that bureaucratic. And for a small, agile organization, that'd be like sailing a yacht and throwing the anchor out at the same time. It's going to drag you back, and that's not what you want. But if you're sailing that yacht, you need to know where you're going. You need to know how fast you want to get there. What capacity does your boat have? Mm-hmm. Who's on the boat with you? And are you all doing the right things at the right time? I'll tell you what, Romeo, when you might find this when you're talking to a lot of startups and you ask about how do you make decisions, it sometimes can be a really cloudy response you get from people. And you think, I'm not quite sure do I go to you, or do I go to your partner? Do I go to your CFO or your COO? How do I do it? So governance helps you structure that kind of stuff at an early stage.
Yes.
How soon should you think about it? I would say from day one. But going back to my point about the language, you might start a company, you might have an advisor. You might have somebody who you just talk to on a regular basis, a person you respect. That is governance in the lightest sense, that you're seeking the advice of somebody to help you, guide you. You could ignore advice, but you're taking that experience and advice. So that's the first starting point for an individual thinking about that journey. How do I get on that journey? It might be your accountant, it might be your lawyer, it might be your best friend, your dad, your mum, your sister, your brother. It doesn't matter. That's the first start of it. And
I would say that would be more like the early stages when you're in the idea pre-seed kind of, so the foundational practice. So now that you've kind of started that discussion, so that's the early stage, and then the next stage of the business would be like the seed stage. So let's kind of go through each of those stages, and then you can then probably give our listeners what, you know, governance should look like at each of these stages. So we started with the early stage. Let's look at the seed stage. So that's like when you just start getting some money and get up and running. What should that kind of look like?
So you've got to think about governance from your stakeholders' point of view as well as your own. Mm-hmm. So at that point, your stakeholders are changing. So you're now starting to get seed funding.
Yeah.
For which the people who are giving you funding will be looking for some responsibilities for you as a business that you're going to apply back to that, including paying back or giving a return on their investment, depending on what funding you've got.
Yeah.
So they will expect you to have a little bit more structure. That might be that your business plan is much better defined.
Right.
Within that business plan, it will have a purpose.
Mm-hmm.
It will start to have a set of objectives and measures.
Mm.
So your funders will want to know, are we on track? Are we going in the right direction at the right speed to the right place? And are we going to get there? They might turn around to you and say, how do you know? So where do you get those measures from? Where do you get the answers from, responses? And if you're not a finance person, do you have financial advice?
Yes.
Are you getting somebody, when they are not in the room with you, they want to know that the business is in good shape and their investment is one that is likely to, not guaranteed to, but likely to make a return for them. Because, let's face it, some early seed funding is intended in the right place, and it doesn't always have the right results.
Yeah.
In the way every so often. So you start to have that structure around KPIs or objectives, but I would make it, you need to keep it light touch to a degree as well. You don't want to be burdened by saying, I want a meeting every week. I want a flight every Monday morning, please. That's not what you need at that point.
But also at this point, you need to make sure, wouldn't you say at this point is where things like you're thinking about, do I register the business and what structure it should look like? You know, do I get a VAT registration? You know, all of those kinds of regulatory and compliance kind of stuff as well, right?
I've got to say, when I was setting my small business of my own when I was leaving BT, just to set up one, just to see how it went, and it's a bit of fun actually doing it. It was never intended to turn over shed loads. I just wanted to know how it did it. And I went to see the Chamber of Commerce actually, and I spoke to the Chamber of Commerce that I knew, and they advised me and said, you need to talk to an accountant, which I did, and I found an accountant who I could get on with.
Yeah.
I didn't go to. I wanted one who was on my wavelength, who understood that I'm not an accountant. I'm not technically minded. I'm more. I see more things in pictures rather than in numbers and words.
Mm-hmm.
So I needed to fill that gap in for me. And it was my accountant who then said, right, let's think about all those things you said. And my answer to him was, do I need to do all those on day one? And the answer was no, I didn't. I don't need to think about it on day one. I don't need to think about employment law on day one. I don't need to think too much about health and safety to a degree, because mine's a consulting business. So I wasn't employing a factory. But I did have to think about something I'd never thought about before: personal indemnity. If I'm giving advice to somebody, I need to indemnify the business against bad advice or unintended consequences.
Yeah.
So they filled in the little gaps for me, and they said, let's meet every quarter on a meeting, like on a Teams meeting or on a Zoom meeting. And we met every quarter just for half an hour to chew the fat. And at the appropriate point, he said, now you need to consider VAT, because you're now starting to get an amount of income where you might exceed the threshold.
Yeah.
And we started doing it. And they were really helpful in that kind of guidance for me, as that professional guidance that I didn't have myself. And it reinforced in me. But however, Romeo, the crucial thing they kept coming back to say, tell us what your business wants to do. They were really clear on, you need to guide us on the purpose, the direction of your business, and we will help you structure it behind that, rather than the other way around, rather than me being held back by a structure or a framework.
And what do you think they meant by that when they asked that question?
So for me, how ambitious am I? Do I want to be a $1 million organization?
Right.
Do I want to grow and employ 5 people? Do I want to be reliant on just me?
Right.
Or it might be, Romeo, that said you need to employ these people, or you have them as associates, or you have them as external, and you pay for them on a daily basis, as it were. So it was thinking about my ambition to grow, and because I didn't want to run it as a business, it was just for 10% of my time when I was going to be doing those things, it wasn't the be all and end all. So for me, that was very different to how you might have set up Lumorus, for example. Very different.
Yeah.
Probably because I'm 30 years older than you, in a different stage of life. But it was understanding me and my organization and what my ambition was. And that was really helpful to do it. So it wasn't a one size fits all.
Yeah. So we're now, that was, you're getting seed money, the business growing, we're in early growth stage. What should governance look like when you get to that stage? Say, for example, you are now, like $500,000 to $1 million in terms of turnover, the early growth stages. What do you think the governance structures of that business should look like or could look like?
So you're probably now in a business at that point where you're starting to look at having people working in an organization.
Yeah.
More than one. You think about tiers of management. So
Yeah.
do you have a board of directors, or do you have an advisory board, or do you have an executive committee or a management? How do you get ideas out? How do you, if you as a leader, how do you tell people and include people in their decision making as necessary for the organization? Because you're working in a small team, but you're still accessing, your stakeholders are still important. Your financial backers are still important.
Yes.
In one of the companies I was working with and advising, they had 5 different financial backers for this organization. Each one wanted different things. Some wanted to meet every month. Some wanted hands-off approach. They trusted the leadership of what was going on. So we had to start creating very light touch PDFs or data of information that could feed back to those individuals who wanted that information on a regular basis.
Right.
And allow them to ask questions. And some of them just wanted the evidence that and the reassurance that their money's well invested and that you're on the right track to getting either the returns or the growth that you want. But it's about managing your stakeholders, managing your teams, and you're starting to put structure in place. Then you've got your legal side where you've got compliance issues around, to your point, around VAT or about PAYE or about in the UK, there's a pension law where you've got to register your company or decide you're not going to register your employees to pay for a pension, but you have to determine yourself out at that situation. There's a lot of things when I started mine up, there was a lot of things in using software. I was using Xero.
Right.
Other
Yeah,
software
we
isn't.
use QuickBooks. Yeah.
Yeah. And I found Xero to be pretty helpful actually in putting. If I didn't know how to do a VAT return, I could click on it and it would take me to a webinar and get a download of information which I could validate online with other people. Or should I be thinking about? Well, personal indemnity was quite an easy one. It was an obvious one. I had to do it. There's no way I could not do it. But how do I claim for expenses for my employees? They were really helpful in that. And I'm cheap in the sense that I'd rather do it myself than go to my accountant who's going to charge me, £100 an hour just for the conversation to tell me
it's frugal. It's frugal. You're frugal, Mike, not cheap. Frugal.
But there are some things that you can self-help in those things. But the compliance around the legalities, am I filling these forms in the right way?
Yeah.
Your software can often help you do that, or I wouldn't necessarily go to friends. I might go to experienced or professional friends for doing that, who are advising me to help me. In the same way as most people do. So your structure then is still going to. At what point do you form a board?
Yeah, so that was going to be my next kind of follow-up question. Like, so we've had the pre-seed, we have the seed, now we have the early growth, and the next stage is usually Series A, Series B, and beyond. Like, at what stage would you say it would be recommended to have a formal board in place and all the other infrastructure around governance?
I'm going to dodge the question in one sense, Romeo. There's no direct answer to that. It's when it feels. Well, it's two senses in the sense. One is when you feel it's appropriate, and all your stakeholders, your investors feel appropriate. And again, just don't think of a board of directors being bureaucracy and corporate. You're having a span of layers of an HR director, a COO, a CFO, a CIO, a CTO, and all the O's you can get. You don't need all those. You might have the owner or the leader of the business. You probably have a financial person who leads at that point. You might not have a head of strategy. That might be you as the owner of the organization still. But once you start getting 2 or 3 in a leadership position and you've got people underneath that, it's now worth thinking about whether you call it a board of directors or an executive committee or a management team. But the point of it is defining who has responsibility for doing what in your organization, for making decisions, and how you will make a decision.
Right.
How do you ratify those decisions?
Yeah.
How will you validate those decisions at some point? Who has the authority to make those? Because you're now realizing as the head of that organization, you've no longer got the time to be doing all the things that you were doing. You've got to trust people to do it, but you want a framework in which these things are happening appropriately. So, example, you might say to people, you have the ability to approve up to £10,000.
Yes.
But not above that. So you put a rule in place.
Yeah.
And that's all governance is. It's a set of accountable rules that you're putting in place to give you a toolkit that enables you to manage and lead the organization in the appropriate way.
Yes.
Go back to my point, though. Your investors at some point will expect it or even tell you. It's time. I want to see what your structure look like. And as soon as they say to you, what's your structure? You realize they want to know, what are your rules? What's your accountabilities? How do you seek reassurance? And once you start to get that level, you're probably starting to be audited by somebody who equally wants to see it. I'm going to go to another room there now, Romeo, in terms of you might start to have a risk table for your risks of your organizations.
Yeah.
Which leads into a big company. We're going to risk matrices and risk appetites.
Yeah.
Even small ones need to start thinking about the risk appetite, and you will talk about it, but never maybe have a risk committee at that point. But it's something that goes to the exec.
It just goes to show that a lot of times when people hear the word corporate governance, they think of a board.
Yeah.
And basically, what you are saying is that a board is great, but it's not the board. It's the infrastructure, the processes, the systems that you have in your company that helps to make sure that the company runs efficiently, ethically, and deliver value. That's what governance is really all about, really.
I wrote this one down for you. I said it's a toolkit. This is my words. A toolkit that enables your management and your board to deal more effectively with the challenges of running your company, putting processes and controls in place that in the interest of your stakeholders, your shareholders, your employees, your customers, and your community.
Spot on. That's a tweetable moment right there, as Oprah would say. Tweet, tweet. Yes, we're definitely going to create a meme for that one. That's so spot on. Definitely. So I mean, we've been talking about the board, and we've established that it's not necessarily, about the board. What are some of the advantages you would say of having proper governance within your startup or small business?
So I would say there are multiple. Well, let me give you two or three really big ones. I think for me, one is about gaining control. So one of the hardest things as you grow an organization is, how do you keep control and how do you release potential without losing control? Governance gives you the structures and the frameworks you put in place to make the effective decisions that you need to make, managing the risk you want with the appropriate safeguarding rules and regulations that you want in your organization. These could be really light touch.
Yes.
You don't need to be meetings every Thursday morning.
Mm-hmm.
It could be really, really light touch. But that should give you more assurance that the organization is in control. You're not going to drive your car and take all your hands off the wheel, look out there, use your phone, sitting in the back seat without it being an autonomous car. You're not going to do all that. But in an organization, you might need to be sitting in the front seat now doing things while somebody else navigates for you, or somebody else presses the pedals for you. So that will be the first one. The second one, which is not often talked about, but I would argue that as you grow your governance level, you get diversity of opinion and views. Definitely. So no longer is it one person's view. You're paying people that you trust. You're probably paying them a lot of money relative to your turnover, and that doesn't matter what the number is. But you're employing them for a good reason, because they're damn good at their jobs. So you must value their opinion, and you're getting diversity of views. So having a board or a structure or a framework where you bring people together to discuss those objectives and how well we're doing, you're now getting a good, diverse set of views and opinions.
Yeah.
And those back to my point earlier on about whether you're advisors or non-execs or whatever you call these people, whether you pay them or you're not paying them, it doesn't matter. They might have a different view to you, but you can be respectful and listen to them. That's what they're there for. You don't have to agree with them. You don't have to implement what they do, but you might ask them why they're advising you that way, or why they're suggesting it, or what's the rationale for doing it. So it's that piece for me about diversity of view. And that only for me adds strength to the organization.
Yeah, because most times when you think of whether or not it's the senior leadership team, or even if you think of it, a board per se, these are individuals with different experiences, who have probably worked in different industries. Absolutely. So they bring different ideas. They know the different challenges that that exist, etc. So yeah, I completely agree with that, and it's one of the advantages that we have seen in terms of, like, at the stage that we're at, we have a board of advisors, and it's having that ability to pick up the phone and have a conversation with Mike and say, listen, we have this client, this is what they want, what's your opinion on it? Do you think that the commercials that we're, as I've done with you a lot of times, do you think the commercials that we have around this make sense? How could you help us make this much, much better? And, or someone else on the board who might have technology experience, like Ed, picking up the phone and said, look, we're thinking about this kind of technology. What do you think? It's just having those different kind of viewpoints that help, especially when you are a founder, that's probably just, you still have an SLT, but these external kind of viewpoints as well helps you in terms of getting outside of your head, challenging your thinking, and also helps you to say, okay, I'm not really getting mad, in terms of my thinking, or helps you with a completely different perspective that you haven't really seen.
Completely. And even a large organization will have those non-executives on the board who've got power on the board, but they're there to give advice and guidance. They're there to seek assurance and reassurance. We should flip back there, Romeo. One of the early questions you're talking about, where advisors are really helpful, is in structure of your company. Should you be a PLC? Should you be a social enterprise?
Yeah.
Should you be a community-based company? Should you be a trust of a charitable trust?
Yeah.
So I use that word, which I didn't really explain properly, when I said, what is the purpose of your organization?
Yes.
So defining that at the early stages is really, really quite useful, because then it determines potentially what structure you might have for your organization, and therefore what governance you require in place about compliance and regulation.
Yes, yes.
Forgive me, I immediately went into, it's going to be a business that has to be registered as a PLC type, limited by guarantee or whatever organization, and it clearly doesn't.
Yeah, yeah, because each of those different structures demand different kinds of governance structures that needs to be in place.
Absolutely.
Right? A PLC, like we were registered as a PLC, is a completely different ball game than being registered as a limited business.